Hi, today we are going to discuss very relevant and important topic regarding UAE corporate tax filing in simple 8 steps. This is part 2. In part first, we already covered first 2 steps. We will start from step 3rd. Come with me in Emirates tax portal. We already covered these 2 steps. First is taxpayer details, second is election. Election is very important for your understanding because you opted funds that will be applicable for your future. You cannot revoke that election subject to certain condition. And here we will start from accounting schedule. Accounting schedule is very simple step. In this you need to inform according to your financial statement. For your understanding, first of all we need to fill statement of profit and loss account according to the your FS. After that we need to inform here statement of financial position, means we need to inform balance sheet information. Whatever is coming in the financial statement, that you need to put here accordingly. Finally, we need to inform the audit related information, whether your financial statement is audited or not. We need to inform accordingly here. I hope you understand. This is very simple step for you, and you need to click next. After completing step 3, we need to inform in step 4 and 5th regarding the adjustment. What the outcome is in the accounting schedule? Outcome is, you can say that, accounting income. Whatever accounting income come from the step 3rd, we need to make adjustment in step 4 and step 5. After adjusting step 4 and step 5, that time in step 6 we will arise the taxable income. In the taxable income, whatever the tax liability is generated, we need to adjust with the tax rate. That time final tax liability will be available. I hope you understand. This is the full roadmap. We will go through one by one. In step 4, we need to take some adjustment. For your understanding, we need to inform firstly investment under the equity method of accounting. What is this investment under the equity method of accounting? For example, if you are UAE company and invested in another company, you can say that more than 20% up to 50%. That is called associated company. If you invested in associated company and in your FS you are following the equity method of accounting, that time you need to inform accordingly. In second step, if there is any realized or unrealized gain or losses in the balance sheet, that will not subsequently be recognized in the profit and loss account. If you are following this type of scenario, you need to inform accordingly here. Further, realizational basis adjustment we already discussed in detail in first part of this video. Here we will discuss only the adjustment. So if already elected realizational basis, what the actual amount of unrealized gain or unrealized losses, you need to inform accordingly here. Further, related to the transitional adjustment, if you are already elected in election part transitional rule, that time you need to inform accordingly here. We already discussed in first part of video in detail with the example. So we will skip here. And further, exempt income. For your understanding, if you are getting dividend from UAE registered company, that time it is called the exempt income. You need to inform accordingly. Further, uh, if you have any participating interest, what is the participating interest? For your understanding, if your company is holding in another company 5% or more than 5% ownership, and you are earning some income and losses from that investment, that is called the income or losses from the participating interest. If you are following this type of condition, you need to inform accordingly here. I hope you understand this step. I already covered all these things, and you need to click next. In this step, this is step number 5. This is other adjustment. We will go through here. Here, first of all, we need to adjust whatever the expenses disallowed by UAE Corporate Tax Law. For your understanding, if you are included these type of expenses in your FS and step 3 or accounting schedule, that time you need to make adjustment here. For your understanding, entertainment expenditure 50% will be disallowed here, and any contribution in private pension fund subject to certain condition, that will be also disallowed. Further, If you are making any donation other than qualifying public benefit entities, that time that amount also will be disallowed here. Further, expenditure related with the exempt income, that will be also disallowed here. Further, dividend and profit distribution or other similar nature of payment you made to your owner of the company, that also be disallowed as per UAE corporate tax law. Further, any expenses related with the personal purpose, that time that expenses will be disallowed. And if that expenses related with the partly business purpose and partly for the personal purpose, that time whole expenses will be disallowed here. Apart from this, there is a other non-deductible expenditure. Here you can consider for your understanding, if there is any penalty of FTA or other government authority, that time you need to inform here that expenses also will be disallowed. I hope you understand whatever expenses disallowed by UAE corporate tax law, we need to inform here. This is a list of disallowed expenses. I hope you understand. Further, there is a requirement of adjustment for interest income oblique expenditure. Here we need to inform, have you incurred net interest expenditure? If you incurred net interest expenditure, what is the meaning of net interest expenditure? Means the interest expenditure after adjusting interest income, that is called net interest expenditure. Whatever in the current period together with the net interest expenditure of carry forward, if exceeds AD 12 million, we need to inform. What the this means AD 12 million? For your understanding, in UAE there is a interest expenditure limitation rule. That rule will be applicable when your interest expenditure, net interest expenditure, is exceeding 12 million AD. So that's why they are asking you this question, whether that interest specific interest limitation rule applicable on you or not. We need to inform accordingly. Further, does the taxable person wish to deduct any brought forward net interest expenditure in the current tax period? If due to that rule, if there is any brought forward net interest expenditure in current tax period, we need to inform accordingly here. Further, amount which are non-deductible as a result of this rule, we need to inform here. Further, this is other topic, transactions with related parties and connected persons. This is related with the transfer pricing. If you are dealing with related parties and you are not following the arm length price, that time you need to inform and adjust your accounting profit accordingly. I hope you understand. Further, we need to inform here adjustment for income and expenditure derived from a qualifying investment fund. For your understanding, what is the qualifying investment fund? For example, you can take the investment in mutual fund, investment in real estate. So this type of investment is called the qualifying investment fund, subject to certain condition. We need to inform accordingly here if you are dealing this type of investment. Further, other adjustment, under UAE corporate tax law, there is a requirement to mention any other adjustment. You need to inform accordingly here. I hope you understand this step. We already covered all the scenario of step 5. After understanding, we need to click next. In next, this is after adjusting what is the outcome? Taxable income. You can see this. After taxable income, we need to we have option to set off the losses of group entity. What is the group entity? For your understanding, if there is a common holding, if there is a common holding 75% or more common holding, that time that is called the group entity, and that should be registered as a tax group. Then if one entity is incurred profit and other entities incurred loss, that loss can be adjusted with the first entity. Means between the group entity you can adjust the loss. So accordingly we need to inform here. I hope you understand. And after this we need to discuss tax calculation and tax credit. For your understanding, what is the tax calculation? UAE corporate tax calculation is very easy. Up to 375,000, there is a zero rated tax. Beyond that, you have to pay 9% tax on that. Be remember, if your entity is free zone entity, and then you cannot get the benefit of 375,000 for non-qualifying incomes. So be remember this thing. Other part, there is a very simple calculation. Up to 375,000 there is 0% rate. Beyond that there is a 9% tax rate. After getting the corporate tax liability, we need to understand whether any tax credit available for you or not. This is related with the double tax evasion agreement. We already discussed in first part of this video. If you are following this type of scenario and there is a double tax evasion rule applicable in your country in which you already paid tax, that time you can take the benefit of tax credit. For your understanding, we take the example of Indian branch. There you already paid tax in India, and now that is a part of your income in UAE also. So you don't need to pay again tax on that. So that's why you can take the tax rate on the income which already added in UAE corporate tax law. So whatever is income added regarding you already pay tax, and you need to calculate what the UAE corporate tax. For your understanding, simple. If you already paid tax in India on the 1 million AED income, so 1 million AED in income in UAE there is a 90,000 tax. For example, you already paid tax in India, you 200,000 AED. That time that whichever is lower side, that will be tax credit available for you. I hope you understand. In detail you can see in my first video, there I discussed double tax evasion rule in detail. You can understand there. Further, we need to inform here, if you already taken any estimated and provisional figure in your FS or in your corporate tax filing, you need to inform accordingly here. This is final step we need to understand regarding the additional attachment. Here is first important thing: financial statement subject to turnover. If your turnover exceeds 3 million AED, that time there is a mandatory you have to attach this financial statement. Regarding the supporting document regarding market value of qualifying immovable property or financial asset or liability at the start of first tax period, means this is related with the transitional rule. If you are electing the transitional rule, that time you need to attach supporting document of the valuation here. Further, tax residency certificate in foreign jurisdiction, that is required if you are taking the tax rate in UAE corporate tax law. This is very simple. I already explained all these things. Step 6 is already completed. When you are completed, you need to click next. This is final step, review and declaration. Here you need to see whatever information you already filled here, whether it is correct or not. If correct, you can declare and file your UAE corporate tax return. I hope you understand. This is simple 7 step. There is a one step is extra, that is 8 step. You can understand relief. Relief is available for only qualifying group. So if you are dealing with the qualifying group, that time one option, one step will be extra, that is relief. You can understand that is business structure relief, or if you are transferring any asset or liability to between the member of qualifying group, that time you can take the relief of that. Only this part is not covered here. So I already discussed with you. Thank you for watching my video. If you like, please comment here. If you have any query, please drop here. I hope you understand. In next video, we will discuss on the tax planning, so you can understand what is the tax planning, how can reduce your corporate tax in UAE. Thank you very much.